Well, welcome to the MT Predictor portion of the 17th Online Trading Expo. Again, thanks to Larry Jacobs for putting these together, and I hope this is useful for you. We're going to talk today about the trend continuation trade. We use what we call a decision point trend continuation trade here at MT Predictor. I'm going to put up the disclaimer here. You can go through that, and this is important. A disclaimer is always important because this is the whole crux of trading. If you can learn to control your risk and then allow yourself to have larger rewards over time, you can make money at this game. If you are not able to control risk, or you don't learn how to control your initial risk, it doesn't matter what method or system you use, you're just not going to find success. So this is important. All right, let's talk about the trend continuation trade, or decision point continuation trade. We're going to talk about, we'll just go through this slide here and then we're going to get to the charts. You can read the article that accompanies the video here as well, and see the charts along with the article. As far as the trend continuation trade, we're talking about when support and resistance don't act like support and resistance. So in other words, a lot of traders look for support and resistance because they're going to buy off of support, they're going to sell resistance, and that makes up a bulk of their trading strategy. And it's typically, a workable or good strategy. But there are times when, about 2/3 of the time, those levels will act as support and resistance as they're supposed to. But sometimes the market, has a mind of its own, and it goes through those levels. It goes through support or goes through resistance. And if that happens, we need to change our strategy up, because obviously if we're trying to continually buy support and sell resistance, when support is not acting as support and resistance is not acting as resistance, then we're going to be very frustrated and end up with a lot of losing trades. So instead, we want to, when the decision is that the trend, when it reaches a support level, is to go through that support level and continue down, in this case, let's say, then we just want to go with that trend and implement what we call a trend continuation trade. Alright, so that's what we're talking about here. Alright, so our first step is we're going to need to find support and resistance, because we have to know where are the levels that we need to see what the market does, how it reacts at those levels. So we're going to find our support and resistance. We'll use our decision point tool, and I'll show you how we look for areas of support and resistance. Next, we'll talk about the setup. So once the price comes into our support or resistance level, what are we looking for? And we'll go through each step of the setup there, and then executing the trade. So where do we enter? Where's our stop? What's our correct position size? What's our target? How do we manage the trade? All that. And then we'll look at an additional trend continuation setup, and this is based on an Elliott wave pattern. Most of you are probably familiar with a 5-wave sequence up or a 5-wave sequence down, and the tendency after that, as the market tends to correct after that sequence, where should it correct back to, and then what if that area doesn't hold as support or resistance, how to take advantage of that and set up a trend continuation type trade setup. Alright, so let's end this, end the slides here, and let's just get to the charts here. Alright, this happens to be a 3-minute chart of oil. Okay, and we'll go through the steps here. First of all, we want to identify support and resistance. I'm going to remove this level here. So here again is the 3-minute chart of oil, just a 24-hour chart here. I'm going to go to the 15-minute chart. So what we do is to find our support and resistance levels, whatever time frame you're going to trade off of. If you're trading off of a 2-minute or 3-minute or 5-minute chart, we're going to go to the chart that's about 3 to 5 times greater than that. So in this case, we'll go to the 15-minute chart. If you trade off a 15-minute chart, you might go to the 60-minute chart to map out your support and resistance levels. If you trade off a 60-minute chart, you can go to the 4-hour chart to map out support and resistance. And if you trade off a daily chart, you'll use the weekly chart, and so on. So let's go to the 15-minute chart here. Okay, let me clear all these levels off here. So just to give you an example, if we go back here, I'm going to eliminate the right hand side of the chart. You see we've got a swing low here on the 15-minute chart. Just swing high here. The software connects these swings automatically. But what we want to do to find our next level of support or resistance is we're going to take this swing low here. I'm just going to right click on that swing low and choose a manual decision point. This gives me my level here, and I can drag this back and forth. You see it's labeled decision point. And what we're saying is if price comes down into this level, the tendency is about 2/3 of the time this is going to act as support. So when price comes down into this level, you can see it came right down to the tick. This is where we potentially want to be a buyer. We can go down to our smaller time frame and look for long trade setups. Right now, as the morning progressed, or the evening progressed here, we've developed a swing high here. So we can take a decision point, just like we took a decision point there. We can take a decision point off of this. And this gives us a next level of resistance. Now, if you got another decision point, or another swing high here, we could also take a decision point off of this level. Alright, now again, we would anticipate about 2/3 of the time, if price comes up into this level, we should see the price fall off there. But you see what happened here is price, the decision was that price was going through the level. So now we know we don't want to be a seller here because we've gotten closed. In fact, we've got two closes above the level here. Once we get those two closes above a level, a decision point level like that, we look at this level as being taken out, or the resistance is not going to act as resistance, and we anticipate the trend may continue higher, at least until we get to the next level of resistance here, which we know is here now. Now we're not going to trade off of the 15-minute chart, we're just using this for our areas of support and resistance. So if we go down to the 3-minute chart, which let's say is our trading time frame, let's let this load up here and just go back here. Let's just look at a couple things. Okay. This level, you can see these are labeled. Even though we're on the 3-minute chart, you can see here's our 15-minute support level. And so you see when price came into this level, right to the tick here, you know, we could actually look to pick the bottom here. We've got the tools in the software. We can create our own trade setup based on our own analysis, right? We could set up a trade here, you know, as long as our target is, you know, twice our initial risk, you know, anywhere in there or better, all right, is a good trade setup. So this is normally, if you're going to buy support, this is how we would set this particular trade setup. Right. But when we come here, here's our next resistance level from the 15-minute chart. Again, it's labeled decision point 15 minutes, so you know what time frame it came from. Right. When price, the oil opened here the next day, and you see price went right through the level here. In fact, you see this this indicator here at the bottom, what we call our strong trend filter. When this oscillator gets into the gray band here at the top, it's indicating, you know, back at this point that there's going to be more upside ahead. And so it maybe gives us a little heads up that price may want to go through this level here. Okay, now we get a close above the level here, and then you get this little, what we call, wiggle. So price comes up through the level, it kind of wiggles back down, and then it's going to take out this swing high here. And so, you know, we've gotten, when we go to the 15-minute chart, we saw we had two consecutive closes, or two closes above the resistance level here. All right, so what we can do is, once we get this wiggle here, we've got our swing high in here, we could set up a trade to take advantage. If they break this, the highest of the highs here, and see if this is going to get fall through and trend continuation, which again this indicator is indicating that there's going to be more upside here. Alright, so how do we, so that's the setup, if you will. The move into the resistance level, closing above the level. We had two consecutive closes above the level. Okay, we had one here, we've got one here, and also on the 15-minute chart. we can set up a trade using a risk reward tool. Let's say we want to get long if it breaks this swing high, and we want our stop below this little swing low here. And let's say we want to run this, see if we can run it to the next resistance level. So at this point now we'd be long 2 contracts here. We're controlling our risk. So our maximum risk for this account is going to be $400. So we can't trade 3 contracts because that would be over our risk limit. We don't want to trade 1 contract because then we'd be trading too small position size. But based on the size of the stop, we could do a 2 lot here. Our target that we've chosen is 2.3 times greater than our initial risk. That's a minimum target that we would look for what we call 2R, or twice our initial risk or better. So on a $360 risk, we can take out $832 if we can get to the target. Again, no guarantees that we can get to the target. That's why controlling this initial risk is all we can control. Got no guarantee that it's going to get to the target here. So we take care of this equation. Right, again, indicating here on the STF that there's more strength to the upside. And now we just wait, and you can see price has reached the next decision point level here. We could take our profit here, or again, we got strength on our STF, so we could, these blue dots below price here are our ATR trailing stop. We could start trailing with a trailing stop if we wanted to, pass on this initial target here, and see if we can capture more upside. So as price moves up, or as these dots print, we can move our stop up, and you'd be stopped out here for about 4 times your initial risk. So on a $360 risk, taking out about $1,500 of profit there. Alright, so let's look at another example, maybe another market. Alright, so let's take a look here. This is the Euro US dollar on the daily chart. You can see I've got the map, the weekly support mapped out here, and you see that price fell into the weekly support here. Again, notice strength on the STF to the downside, maybe giving us a heads up that there may be more downside ahead. So maybe preparing. Alright, what we're anticipating now is coming here is to get a short-lived kind of rally, what we call a wiggle, before things roll over again. Right, so we get that rally here. There's a swing high that starts to come in. Right, now we're looking to see if the level will get taken out. So we're looking for a couple of closes below the level. Ideally, we want to get a couple of weekly closes. So this is the daily chart. So obviously each day, we're going to look at 5 trading days. In this case, 6, including Sunday night. So here, I've labeled. Here was our first weekly close below the level here, and then here was our second weekly close. So once we get those 2 closes below our support level, we deem that the level has been taken out. In other words, it's not acting as support, and therefore we may want to go with the trend now to the downside. So yeah, we could have gotten in early here on a break of this swing low. Right. To be conservative, we'll wait for that second close here. Here a new swing low comes in, so if we want to go short, if this swing low breaks, we could do that. Right, so let's just use our risk reward tool and say we're going to go short below that level. We can put our stop maybe above this swing high. Right, let's just throw a 2R target out there for now. So we could short 1 mini lot there, risking, again, not exceeding our maximum risk of $400 for this particular account. All right, the target's at least 2R there. You see we got another rally here. If you want, maybe we could move our stop above this swing high. Now we're into the trade. It's broken our level here. And now we want to see, will the trend continue to the downside? Now notice we've got strength on the STF coming into the STF. So now again indicating more downside ahead. So we could pass on our initial target here and maybe start trailing with the ATR trailing stop. That'll be these red dots above price if you're short. And so if we're doing that, right there would be our stop. And as these print, we continue to move it down. If you use our software, we have a trade module, and the software will just manage the trade for you automatically here. It'll move your stop for you automatically each time. All right, so as this continues to break down here. Just going to continue to move our stop down. Continue to move it down. Now if we get stopped out here, we're going to take at least 4 times our initial risk, worst case scenario, and basically we just get about stopped right there for about 4 times our initial risk. Right, so this is just what we call a decision point continuation trade. When these levels, instead of acting as support and resistance, which they typically do about 2/3 of the time, about a third of the time they're going to go through the level. We get confirmation. Now you could have even been a buyer here. Let's say you were a buyer in support. When that trade failed and you got the 2 closes, now you know you're not looking to be a buyer anymore, but you keep the loss small and controlled. So let's say you lost $400 on the long side there. Price goes below, and then you take about 4 times your initial risk. So we'll lose 400 to make 1,400. We'll do that, all day long, right? Or even if you only took twice your initial risk here, your win was twice the size of your loss. Right? That's the other component. Doesn't get talked about much, but trade setups are great, but you got to have the risk control and the reward side of the equation right to make that all work. All right, let's take a look at another example. All right, this is a weekly chart of oil. Okay, here's the last swing into the high. So we're going to take a decision point off of this level. Right, again, that'll be on the chart ahead of time before the market gets there. So this is an area where we anticipate we may get support. And we're potentially looking to be a buyer. But notice again, we have strength on this STF. This oscillator is in the gray band, this strength band at the bottom here. It's exceeded it. That's indicating back here that there may be more downside ahead. Alright, so sure enough, price does begin to go through the level. Now this is the weekly chart. Right, this is our larger time frame. We'd want to go down to the daily chart to look for an entry. Right, let's go back here. So here's price. Again, here's our weekly decision point. It's on the chart, even though we're on the daily chart now. This is labeled so we know where it came from. Right, again, price starts to break down here. Now we've got a little cluster here. So we kind of get this little wiggle here, a little wiggle here, and then we begin to close below the level. So you could go short, if you wanted to go below a break of this level, maybe putting a stop above that level, and then whatever your target is, right? Or you've got another cluster here. Maybe you want to wait a full, 2 weekly closes below the level, right? Let's just change our target here. Right, whatever you want your stop above this swing here or above here. Right, price again begins to break down. Again, we got more strength on the STF. If you wanted to trail with a trailing stop, we come back here before you get to the target. We see strength on the STF. If you want to start trailing with a trailing stop, again, you could be doing that. You'd be taken out right here in this case for about 2.7 times your initial risk. Right, so it doesn't matter if it's a larger time frame. We looked at a 3-minute and 15-minute charts. It's the same pattern, works the same way in each case. All right, let's look at one last example, an additional trend continuation setup that takes advantage of a 5-wave pattern. All right, this happens to be the Dow on a 15-minute chart, and you can see prices come down here and a rally here. We can use the software to ask the software, is there a pattern here we might want to be aware of? I'm just going to right click and choose Elliott Wave Intermediate, and the software tells me, yeah, you have let's move this over here, 4 waves in here. You've got a wave 1, wave 2, the big wave 3 down, retracement into wave 4 here. Now we anticipate the market to fall into a wave 5 down at this point. So let's project that. With the tools in the software, we can project our wave 5 down so we know where it is in advance. Okay, I'm just clicking on these swing highs and swing lows, and it'll project our wave 5 levels over here. Just drag them over. So here's our minimum wave 5 target and our typical wave 5 target. So we could be a seller we could be a seller in wave 4. We usually wait for our red seller's candle. That indicates that sellers are overcoming buyers in the resistance level with a stop above the swing high. And that would give us 2.5R to that target. But once we've gone 5 waves down here, so we've gone 1, 2, 3, 4, 5. We've gone 5 waves down. The tendency after 5 waves, this is what we call a trend termination pattern. And the tendency now is that we should get a correction or a rally here back to this wave 4 DP. So I'm going to take a decision point off of wave 4 here. Right. If we've come down in 5 waves, the tendency is we're going to rally to this level here. What we want to see at this level, if price comes up into this level, again, we're going to look for our decision point continuation trade. If this holds as resistance, the trend which was down prior should continue down. But if they take this level out to the upside, then what we're looking to happen is, or the tendency is, that they're going to wipe this whole 5-wave pattern down to the upside. What we're going to do then is we're going to find wave 1, or the start of wave 1. We're going to take a decision point off of the start of wave 1 here. Right, let me just remove this level here. Right, this is our next. So in other words, we're saying if this level gives way, this is our target. So a decision point continuation trade. Now the software here generated a buy signal. All right, here's the first blue buyer's candle. This is now telling us that buyers are overcoming sellers in our support area. All right, so again, this is if I take a decision point manually off of this level here, you can see this is the level the software sees, this decision point support. So in this case, we're expecting that support is going to act as support. Now if I do the analysis for this trade setup, the software knows that the correction should be back to the wave 4 DP. So it's set up a nice low risk, high reward trade here. Right, but we want to see how does price react. Now we do have some strength coming in on the STF here. It's reached the gray band at the top. So we're getting this little wiggle. Right, we've got to move here and we're kind of getting that wiggle. Right, now we anticipate, again, now this gapped up and you can see, but where did it go? It went right to our decision point target off of wave 1. So this area got taken out. Once it got taken out, this becomes the target. And that's a pattern that you can take advantage of. Again, if you wanted to trade this particular setup here, again, here's your swing high, here's your kind of wiggle, a break of the high, maybe a stop below, and then whatever your target is going to be the DP off of the wave 1 here. Okay. Now this, this is a day-only chart. So you'd have to use a 24-hour chart on this particular example to get it executed. But just showing you the pattern here and the tendencies and how you can take advantage after a 5-wave sequence. If this wave 4 DP holds as resistance, the trend should be down, continue down, right? If they take it out to the upside, the tendency is they're going to erase this whole 5-wave sequence down to the upside, just like they did here. Alright, let's take a look at this chart. This is a daily chart of corn here. I'm just going to ask the software at this peak here, is there a pattern we may want to be aware of? And it does say we've got a nice 5-wave pattern up here. So at this point we anticipate this market should correct, again, where? Back to the wave 4 DP. Now we could trade this, we could short this and this be the initial target. Or we can wait, we can see if price does in fact come down to our DP level here, which it does. Now again, we've got strength on the STF to the downside here, so maybe a heads up that they're going to go through this level and continue the trend. All right, we get our little wiggle here, and then price begins to break down out of the level. So once again, we can create a trade setup to take advantage of the breakdown here. Let's just say we want to short below that and put a stop above this swing here. Look for at least twice our initial risk. Now we can see the STF is still showing strength to the downside. So we could trail with a trailing stop, right, as price comes down here. Take advantage and see if we can let this thing run. Again, continue to move our stop down as these dots print here, or again the software will manage the trade for you if you have our trade module here. So here you're taking about a 6 times your initial risk out. This is the daily chart. You could look on the 4-hour chart, if you wanted an entry on the breakdown there. So again, this is the 4-hour chart. Here's our daily support. Right. Again, we come into the support, we get that wiggle here, and then it begins to break down. Now we could short it on a break here, or a little further down, whatever we're comfortable with. Let's just say we're going to do on a break of that. Let's say we're even going to use this swing high as our use a 2R target there. Right. Again, well, strength on the STF, we probably would have had to just come out at this target here. Strength showing now once this candle closed. Actually, yeah, once this candle closed. So maybe not able to trail with the trailing stop, but you get the point. Is whatever your analysis is, you could even tighten this up a bit and turn that into 4.6R. Right, once price breaks the level here. Right, so however you want to play it, again, these levels are adjustable, whatever your comfort zone is. As long as your reward's at least twice your initial risk, that's fine. And our software will even tell you if your risk is exceeded and so forth. So anyway, I hope that's helpful. I'll put up go to our website here, just show you a couple of things. So this is mtpredictor.us, and right here on the home page, actually any page, you can just get this free introductory guide. It's called the Introduction to MT Predictor. You just put your name and email, click the button there, and that'll take you, or that'll send you that free guide. It'll explain the software generated trade setups that the software provides for you for new traders and how to trade them, and then it'll get into some of the more advanced trade setups like this decision point continuation type trade. It's about a 50-page guide with charts and so forth. And if you prefer video, if you just highlight your mouse over the webinar tab here, select video training from the drop down. There's a series of short videos here that'll give you a good overview of the software, the ideal patterns that the software looks for, the wave C patterns, the 5-wave patterns that we looked at and how we use those. This middle section is some of the what we call advanced trade setups, like the decision point continuation trade here, so you can get video on that. And then the bottom section is just the software generated signals and how to trade those. You can also start a 15-day trial if you click on the pricing tab here. Our new purchase options are here. Version 7.5 is our standalone platform, our own charting package that requires either eSignal, IQ Feed, FXCM, or barchart.com for data. And then we also offer the add-ons for NinjaTrader 7. All right, there's the add-ons for Ninja 7 without our trade module and the add-ons with our trade module. Basically just $95 to start the trial. That gives you 15 days to use the software. If you decide you want to keep it, you don't have to do anything. You'll just be charged the balance after day 15. If you want to cancel, just cancel within the 15 days and you won't be charged the balance. All right, if you see this presentation, you can send me an email. If you just send me an email, john@mtpredictor.us, you can just click contact us here as well. Let me know that you saw the presentation. I guess the email here is sales@mtpredictor.us. Either one, john@mtpredictor.us or sales@mtpredictor.us. Let me know you saw the presentation. If you're interested in the trial, then I'll extend a 20% discount to those that have viewed the presentation here. All right, I hope that's helpful. And thanks again to Larry for putting these events on. I hope they're helpful, and we'll see you at the next event.